Hello everybody, welcome to another 5 Trends video along with DubaiNews.tv. We are here to discuss a very important, I think, very interesting subject today. In the last 2 videos we did discuss about various investment themes and such as long-term investing, the common mistakes that we do while doing investments. Today I thought it would be nice for us to share my experience in terms of what are the fundamental factors that we should look for while investing. These are my personal best choices. Obviously, if you go through various books and magazines and various big investment strategists who talk about, they in one form or the other, you will see that they do talk about these factors. These are not the only factors. I'm sure there would be much more factors that you need to go through before you decide on any investment. But I go through these simple 6 things fundamentally to look at whether a company is a good long-term buy or no. First and foremost, I think we should discuss about being disciplined and being able to continuously doing investment month after month for a much longer period of time, whether that is 15 years, 20 years, 25 years to 30 years. But that has to be a process that we need to follow. It is much easier said than done. I know that I also, in the last 24, 25 years, many times when the stock markets crash, when things are not going good, you always try to withdraw from the stock markets. And it might look at it as a good strategy at that point in time, but when you look at the long term, it always impacts us. For example, I can give you certain data points so that you know that if you would be investing into month after month in NASDAQ indices, say in 1990, and you would have never withdrawn from the indices, or indices stocks, you would have made almost 30 times your money in 2020. So without doing any research, without fundamentally doing through your market study, products, services, financials, valuation, if you would have only been investing into ETF for the indices or investing in the stocks which comprise of the indices, you would have made a significant amount of return. We don't need to be extra intelligent, we don't need to be extra smart to be able to get that return. So all I'm trying to say is that it is very easy for me, I know today, to say that we should do continuous and disciplined investments. But to be very frank with you, you'll see that that is the foremost factor which leads to wealth creation on a longer term. So we should always make sure that we do whatever come may. We should believe and make sure that we are in that process. We make sure that we're doing a continuous investment, and as early as we start, it will be beneficial for us and not to get afraid with the various volatility that goes on in the market. And believe in your investment thesis, believe in your research, and keep continuous investment. And that will help you a long way in terms of your wealth creation. The second factor that I think is important to consider is that I personally choose, when I look at balance sheets of companies, I look at two very factors, and both are related to cash. How much cash the company has on its balance sheet, and how much cash is it generating, throwing up every time. You will see that in today's environment, you might have a lot of technology companies which are coming in, which are not profitable, which are burning a lot of cash. But you'll see that the revenues are in double digits, growing continuously. But more important than that, you'll see that they have a lot of cash still on the balance sheet, which means they're able to raise a lot of cash. People believe in the story, so they're not going to go bust anytime soon. While maintaining a double-digit growth, they have a lot of cash, and the business that they're doing is generating a lot of cash. That is an extremely important factor, because what that means is that the company can continuously keep on innovating in coming up with its products and services which is needed by the society, which the consumers need. And when they invest into R&D, doing that, you will make sure that the company is on a path for long-term growth. So this is also very simple. You don't need to know financials for this. All you need to look at how much cash quarter on quarter the company is making and how much cash sits on its balance sheet vis-a-vis its burn rate. So that's again very, very critical factor that I take into account, and this becomes more important in today's environment. The third factor, when you look to invest, look at a companies with a product or services which has a very large addressable market. Again, for example, what does that mean in general terms? So if you are a drinks company and you're making Coca-Cola or a drink, you think it could be consumed by half of the world population, potentially at the right price range, then you have an addressable market of 4 billion. You're making a mobile, you think you would have a 50 to 60 to 80 to 90% penetration, which everybody would need, then you have a 6 to 7 billion addressable market. All I'm trying to say is that whatever products and services being the company that you are investing into, whatever they produce, whatever they service, it should have a large enough addressable market. Why is that so? Because we are talking about long-term investment. So when we are looking into doing long-term investment, the company should be able to continuously grow in double digits for a longer period of time, and that will determine the value of a business. We will talk about how I think of value investment and what I think is currently happening in the market, but you will see that one of the most important factors that people do consider while investing is that how fast the company is growing. And obviously I will not go into formulas today, but growth is one of the most important valuation factors that people take into account. So even if you see a company is making losses, you will see that the company's stock is doing extremely well because the company is continuously growing at double digits, or higher double digits, and it is throwing up a lot of cash or has a good cash balance in its balance sheet. And this is a very important factor to consider. The fourth factor which I focus on while I'm looking into a company is look at, and if it's a new company, particularly going for a listing or has just recently been listed, is to look for how much stake does its management have in the company, how much stake its initial promoter has in the company. That will tell you that how much they believe in the story. A listed company, of course, on the stock market, it always declares how much insider trading is happening, how much its management is buying, how much it's selling. It's good to keep an eye on that particular number, because in an old and a very big company, it may not matter so much how much the earlier promoter or the management team has stake. If the company is 40, 50 years old, 30 years old, may not. But if it's a new company which has got listed a year, 2 years, 3 years back, it's important to see how much the management which is driving the business of the company believes in the story, how much they have a stake in the business. And this is where I think my focus has always been to look at how much stake do they hold in the business. Apart from the institutional retail and all the stuff, I do look at how much stake does the management team have in the business. Now, as a fifth point, I'll come back to a point that I have been repeating in the last maybe 4 or 5 of my videos, which I believe is important for wealth creation, and that is compound returns. The compounding returns, when I talk about in this sense here, I'm not talking about investment returns year on year. What I'm looking at is that because we're investing into long term and we're looking at a factor where the business should grow continuously year on year in higher double digits, it's important that we focus on finding companies which can have that growth rate. And we keep discipline and continuous investments without getting afraid with the market volatility, believe in our investment thesis, go through our strong balance sheets, look at growth rates, and keep continuing investment. And you will see the compounding return will be significantly high. If you think the absolute return was 30 times between 1990 to 2000, what do you think the compounding return would be? So this is again something for all of us to look into. It is not very difficult. It is to understand, but to follow it is not easy. And I know that from my personal experience. But if you can follow it, you will always come out as a winner, and that will be a very strong path to your wealth creation. And the sixth and the final factor is something that I have been impressing upon in several of my videos again, which is about financial literacy. When you are deciding to invest into the stock markets, it's very important that you keep yourself updated about what's happening in the market and the economy and the particular businesses or the industries that you are investing into. It is extremely important that you do that, because that is going to help you to decide when to invest, where to invest, and what the market trends are. So every day continuous 2 to 3 hours of reading is extremely important if you want to involve yourself into investing into the stock markets. You could do much more than that. I mean, most of the people who are professionals who are into this investment do much more than that. But obviously, if you are doing it as a side hustle, you may not have that much of time. But still, I believe if you do anything less than that in terms of reading, it will be very difficult for you to make money in the market. So please make sure to do your financial readings about your industries, about the market, about the companies that you invest into, the economies, on a continuous basis every day. And that will help you. A lot of information will come out that will help you also in your thought process. And this is where I think the returns are going to come to you. So please keep on reading continuously, experiencing continuously, improving your knowledge, investment knowledge. If you think you can add value to the life of people through your knowledge and experience, we would request you to make a short video or a podcast and send it over to us at hello@fightrends.com, and we'll try to make it popular among our community.